You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means it is time once again for TWIFO, This Week in Futures Options, the program where the name pretty much says it all. We break down the week that was and indeed still is from a futures options perspective. So maybe we'll talk some ag, some metals, some equities, some rates, some energy. You never know what's going to make it on the show. That's why you have to tune in every week. My name is Mark Longo from theoptionsinsider.com. As well as, of course, from the aforementioned Options Insider Radio Network. Hope all of you enjoyed the epic option block 1000th episode. Spectacular. If you're not listening to the full network, listeners, you're really missing out. We had a great extravaganza, shall we say, on Monday to celebrate 1,000. It's insane to say out loud, 1,000 episodes of a program here on the network, known around the water cooler as the old OB, what the cool kids like to call the OB, aka the Option Block. Hopefully you enjoyed it. Hopefully you're also enjoying the launch of the new Options Insider Plus and Options Insider Pro. Cool new addition to the network. First time in about 14 years we've shaken things up. So that's pretty fun. I know a lot of you are diving into that as well. So we're looking forward to all of that. We're also looking forward to a great show today. This is usually where I introduce my cohort, my partner in crime, Mr. Sean Smith, beaming in from the FTSE Russell studios. Unfortunately, Mr. Smith, well, I should say not really unfortunately, fortunately for him, unfortunately for us, he's actually taking a well-deserved vacation this week. So no check-ins from the FTSE Russell studios this week. But fear not, listeners, we have an able stand-in holding down the CME hot seat, our old friend, Mr. Derek Salmon, the Senior Managing Director and Global Head of Commodities and Options Products. Say that 5 times fast. AKA the guy who oversees all things options over there at CME. Derek, welcome back to TWIFO, sir. It has been too long.
Hey, Mark, great to hear from you. I'm beaming in from the office, so I'm here at CME Center right now.
Oh, great. So we actually can make a connection to CME. I know in the past we've had issues, but it sounds like things are working over there, which is great. And I know we usually like to kick things off with the movers and shakers. We're going to get to that in a second, but Derek's got a lot of cool stuff in his hot little hands from the vol space. So let's get to it. A little bit of the old equities.
It's time to explore the volatility swings, skew changes, and hot options trades in your favorite indices. It's time to talk equities.
All right, let's get to it, listeners, because when we're talking equities, the polar side, the flip side of that conversation is volatility. And there's a lot of vol trending lower this week, I think. It's safe to say, coming into the equities segment here, coming into Showtime, we had our old friend RVX, a.k.a. the VIX of the Russell 2000, right around 23.5, so well below the 28 and change level it was this time last week. Remember, it's been struggling to get back to 30 for a little while, back the other direction this week. VIX come into Showtime was a little bit shy of the 17 handle, 16, about 85 or so. That's a 16 handle in the VIX. We haven't seen that in some time. In fact, one of my cohorts on the last show predicted we might see a 15 handle before the end of this week, which is something we have not seen since the start of the pandemic. So look out below on the vol side, but that 1686 is down nearly 4 points from where it was this time last week. VVIX, which is the vol of vol, coming in a little bit as well, down to about 104. That's down 23 points from where it was last week. And Vol Q, a.k.a. the at-the-money vol of the NASDAQ 100, about 18.75, which is down about 3.25 points from last show. So come into Showtime, that puts that VIX to RVX spread, a.k.a. the small cap to large cap vol spread, a little bit shy of 7 points, about 6 2/3 points, which is actually tighter a little bit than it was this time last week. And then VIX to Vol Q was at about 2 points, which is about 0.75 points or so wider than last week. I wanted to start with vol, Derek, because I know you oversee all things options, and we'll get to that in a little bit, but I know you're pretty excited about CVOL. The last time you were on, you were talking about CVOL, which are, of course, your new suite of implied volatility indices over there at CME. But this time, you've got even more new additions. So what do you bring into the CVOL table these days, Derek?
Well, we do, Mark. We just keep building on the suite of products. And when we talked last time, I think we had gone through our first or our second rollout. We've been putting increasingly numbers of products out there going back to November of 2020. We're super excited because just 2 weeks ago, we rolled out our third suite of additional products. And that includes not only additional individual products. So I think we added copper and we added RBOB and a few of the individual products, but more importantly, we have a total of 6 actually asset class indices right now. So for example, we have a overall treasury CVOL, and the CVOL stands for CME Volatility Indices, obviously, as you well know, Mark. But we've got a treasury CVOL, which includes the 2s, 5s, 10s, and 30s. We've got an overall ag index that has all of our benchmark products inside ags, inclusive of corn, beans, oil, wheat, etc. We've got a metals index that has copper, silver, and gold in it. So we're building on individual products in each asset class, and now we're rolling out. We've got a major a basket index for each of the 5 asset classes as well. So we're really excited. And actually, interesting you mentioned the pullback in VIX a little bit. This is the beauty of CVOL and being able to take our world-leading options complex cross asset class and build non-equities volatility indices out there for folks that, maybe wouldn't otherwise take a look at, fixed income volatility or look at FX volatility or look at ag volatility. Because I tell you what, we've got opposite trends going on in a number of other products right now. You got VIX coming lower in the equities market. Well, you've got 5 consistent days of upward trending volatility in natural gas. You've got the last 4 of the last 5 trading days, you've seen an upward move in soybean oil. When you look at the overall ag index as a whole, it's up. Volatility is up 3 of the last 5 days. So there's just great, rich information available. If you just Google CVOL, CVOL, the first thing that should come up on your browser should be CME Volatility Indices. Click on that, and you will be open to an enormous world of information and just a rich data set to be able to take a look at what's going on in energy, ags, metals, FX, and fixed income, in addition to the VIX and VolQ that you mentioned just a couple of minutes ago on the equity side. So great tools. We just continue to expand these products. And remember, Mark, as we talked about, the CVOL indices are not just the headline volatility level itself. We've got what we call an up vol, which measures the amount of upside or call skew. We've got a down vol, which has just the amount of the underlying put. We've got the skew itself, which is the difference of the call versus the put. We've got a number of different tools and ways to look at these individual products that make this a really exciting tool to add to your listeners' portfolio of products and, a means to interpret what the heck is going on in this market across asset classes.
No, you're right. We always, in fact, we're doing it in the equity segment right now. We always talk about volatility as kind of the flip side of the equities coin, but there is volatility across all the assets. One of the things that really stuck out to me, Derek, is kind of the one you mentioned at the end there, the commodities CVOL index. So you're putting together effectively this basket of volatility. You got WTI in there, Henry Hub, RBOB, you got corn, beans, wheat, lean hogs, live cattle, class 3 milk, gold, silver, and copper. All of that together in one product. So effectively, Derek, I have a hard time even wrapping my head around the concept of one number somehow embodying all of the volatility in all those products, Derek. But I'm going to be fascinated to watch it. That's for sure. Well,
it's super cool. And, it's people have been used to looking at, say, a VIX, for example, to take an indication for the equities market. The equities market itself is made up of how many different companies doing how many different kinds of industries. So it's the same kind of concept. If you're comfortable looking at VIX as an indicator for the entire breadth and diversity of the equities world, then it's a pretty small leap of faith and philosophy to say, you know what? I believe that there is a volatility marker that tells me what's going on in the physical commodities market. And you know what? That tells you what the super cycle is telling you right now. You've got a massive upswing in prices in physical commodities driven by, low rates, increasing waves of inflation coming over the market. And you've got this massive price inflation in commodities. So it's just a fundamentally different way and a new and a unique way for folks to be able to take what they know about the equities market and volatility and apply it to the 5 other asset classes, where you get this rich data set of globally traded options markets in the futures world. And you can use a simple volatility marker to capture as narrow or as broad a snapshot of volatility as you want. And that's the beauty of it. These are all module marks. So if you go in and look at that page, CVOL, CVOL, you're going to come up and you're going to see 41 individual products, both at the individual product level or at the aggregate asset class benchmark index level or at that broader commodities level. So it's a pretty cool tool, and the feedback we're getting on it is really, really positive right now.
I should reiterate, listeners, this is not just at the money vol across all these different which in and of itself would be interesting and or informative. This is the at the money vol plus the skew incorporated in there as well across all these different products. So Derek, I'm really looking forward to the day that someone comes on or a listener comes on and quotes to me this commodity CVOL. And, hey, did you hear this commodity CVOL is 32? And that has some sort of resonance for them. I'm looking forward to that day, Derek.
Absolutely. Well, I'm hoping it's not far. I appreciate you helping us get the message out there and get this tool out in the hands of your listeners, because there's a whole wide world out there. Listen, equities is a great market and it affords lots and lots of opportunity to take lots of positions. By the time you start to look at, I want to trade the individual market in oil or in heating oil or in corn or in copper. Up until now, there's been no way to really understand what's going on in these markets unless you are a real specialist and you are actively involved in the underlying options markets in those asset classes on CME Group. Now there's a really easy way to understand what's going on and take all these markers that we're providing. The goal was to give folks an on-ramp to be able to trade these products over time. Right now, we're in the publication phase of just getting these products out into the hands of your listeners and getting folks to, get a broader introduction into what's actually happening in the commodities market, because the super cycle right now is creating all kinds of opportunity for what's going on in the tradable markets right now. There's no shortage of risk being taken in the commodities markets, that's for sure.
Well, this is going to make my job a little bit easier, Derek, because now when I start going from product complex to product complex, instead of breaking down the engine, I can say, hey, the ag CVOL is 32. That'll make my job a little bit easier and encapsulates it all in one number, Derek.
Well, I'm here to make your life easier, Mark. So just call on me anytime.
Well, I should mention to our listeners, you mentioned we're still in the dissemination process. These are obviously not tradable products yet. They're still on the index dissemination side. And they still are, I believe, Derek, they still are end of day, correct?
Correct. Yeah. Our phasing was, and we talked about this last time I was on the show, The goal was always to start with rolling out sequentially each asset class. We've now done that. We're still working on equities, going through some licensing issues there, but we've got it in all 5 asset classes. Our second phase, which we've now completed, our second phase now is transitioning from end of day to real-time calculation. We're hoping to have that done by year end. It might bleed into first quarter of next year. And then based on the feedback we've already gotten, plus the feedback we're now continuing to get as we've rolled out the balance of these products, including the broad benchmark indices, multi-product inside an asset class, then we'll think about and gather feedback from our customers on the need for a potential tradable product here. So in the meantime, these are end-of-day calculations that are up, and anybody can access for free 2 years of historical data on these. So it's not just a function of loading up today and saying, okay, the price is X. You can go back and play with these indices all the way back 2 years and look at it in 1 week terms, in 1 month terms, in 3 month terms, and just look at how that's evolved over time. The idea is get this into the hands of market users like your listeners and have them interact with it. And the feedback has been, this is great. When can I trade it? And we said, well, let us get from the full suite of products then to real time, and then we'll talk about the need for tradable product. But yeah, for the time being, it's a data set that will help your listeners understand and interpret what's actually happening in these markets.
I like it. So end of day now, and we do have a bit of a roadmap then for when we might have intraday, which I know a lot of our listeners are champing at the bit. The more vol data they can get access to, the better out there. So hopefully by end of year, that's an exciting prospect to have on the horizon. Derek, I could talk CVOL with you for the rest of the day in volatility. I know you got to run pretty soon, but one of the reasons I like to have you on, Derek, is because, like I mentioned, you wear a lot of hats over there, including kind of the hat of overseeing the broad purview of all things options over there at CME. So whenever you come on, you always come armed with some interesting data points, some interesting nuggets about what we're seeing from an overall trend and volume and development perspective over there at CME. So what's been lighting up your tape? What's been catching your eye from an overall options trend perspective since the last time we chatted, Derek?
Yeah, well, listen, everybody knows that the first quarter of 2020 was just an off the charts crazy time. So we all hit insane records of, monthly, quarterly, and first half volumes. It was terrific. Now that's made for really, really difficult comps when you go back and look at this year versus last year. But I tell you, our options business coming through in the second quarter here has really, really recovered nicely. When you actually look at the first quarter of this year versus fourth quarter of last year, our options business jumped 50%. That was Q1 21 versus Q4 of 20. So we're already seeing really good, strong sequential growth. Here's the story inside the story, Mark. This is led by, and this probably won't surprise you because you guys see, just as your listeners see what's going on in the broader markets right now, our agricultural complex is leading the pack. Brace yourself. Month to date, our ag options are up, hold your hat here, 122% this month versus May of last year. It's up 88%. Ag options up 88% through this point in the second quarter this year versus this point last year. It's up 48% versus this full year to date versus where we are right now. So ags is leading the charge right now, followed by very strong results in fixed income, up 33% month to date, and equities are up 27% month to date. So now that we're coming past a little bit easier comps into the second quarter, we're starting to see some real pickup. And, we're doing just short of 3.4 million contracts a day across the entire complex. And we've got growth across the board. The one place that's still down a little bit year on year is energy. We just came off such insane numbers in April and May of last year. But year to date, our options complex is, actually quarter to date, I should say, is up 5% versus last year, and month to date up 31%. So there is just no shortage of opportunity for the markets to be accessing volatile markets where you've got particularly the commodity super cycle story playing out, led by the fastest growth in our market being on the ag side right now, but really, really strong growth across the board. And a lot of the stuff is coming as trading 23 and a half hours a day, Mark. So our fastest volume continues to come from the growth side of it from Europe and Asia. So if you're in this market, you can't just be trading US hours. You got to be on the clock, hour by hour, starting from the early morning Asian open all the way through the US close. And that's what our electronic markets allow customers to do. And that's why we're seeing the kind of growth that we are seeing. So we're excited about the growth across the board, and we continue to invest in our front end, CME Direct, which is our free front end to allow customers to trade whatever they want in our options complex as much as they want. And it's just a great tool with a lot of resources built by your friend and mine, Mr. Nick Howard over there at Bantix. So much of what we're doing is driven by QuickStrike, and it is a terrific set of tools that we have available for free on our front end CME Direct. So again, would be thrilled to have your customers and your listeners, pile in and take a look at these markets and experience, see the growth that we're seeing across our asset classes right now.
I agree with you. Great tools. We mention them here all the time. You guys know where to go for these reports you talk about on this show. Listeners, cmegroup.com/TWIFO. While you're searching CME, type in CME and CVOL into your browser. That'll take you to the whole CVOL page. It'll explain exactly what we're talking about, what these are. And of course, it'll have all the data there for you, which is what you're really coming for. Derek, I'm glad you could join us here, fill in a little bit while our buddy Sean is off gallivanting on a beach somewhere. But before we go, I'm a demanding guy. Before you go, I have to stay. I have to do work. But before you go, I'm a pretty demanding guy. I like to leave our audience wanting more, Derek. You got anything up your sleeve that you think may intrigue or interest our audience? Now is the time, sir. The floor is yours.
Well, I tell you, it won't be news because we actually did announce it already, but you've been pushing me on it as a lot of folks have. We officially announced that we are going to be rolling out a micro WTI contract on July 12th. So you guys have asked for it. You pushed us for it. You wanted access to it. So we're putting a contract out there July 12th. Mark your calendars. Micro WTI. It's going to be a contract that is 1/10 the size of our existing contract. So instead of 1,000 barrels of oil per contract, it's going to be 100. This is a contract that is going to expire the same day as the WTI mini contract, which is the day before our main CL contract. And we are super excited about the uptake. We've gotten a tremendous amount of feedback from our particular retail customer channels about the excitement here. And I think that's a lot of who your customers are and your listeners are. So that's where we are. July 12th is the date. We've been hounded by a lot of folks for quite a while, given the success of our micro E-minis and equities, and then our recent launch of our micro Bitcoin. This is now the next product in our micro suite, micro WTI, and we could not be more happy, particularly given the fact that oil's headed higher again, up to 65, 66. So we're looking to get this into the hands of our customers on July 12th. So mark your calendars and sign up and get involved. We're very excited to roll that out.
Well, there you go. Like they say, everything small is big again these days, especially over there at CME. You guys can't trade enough micro. You put micro on anything, Derek, and people are just gobbling it up. I'm sure they're going to love the micro WTI as well. Like I said, Derek, I'm glad you could join me today. At least someone's doing some work here. Everyone's not gallivanting over there at the beach. And we'll look forward to your next appearance, Derek, because you always come armed with interesting new stuff. And, of course, we'll keep an eye on CVOL until then, sir.
All right, Mark, great to have you. And I hope I was a suitable stand-in for my man, Sean. It's no one can quite fill his boots, but I appreciate them giving the chance today.
No, it was a good fun. Glad to have you on. Again, we'll look forward to more developments, hopefully even real-time CVOL by the end of the year. And now it's time for us to keep on rolling the way we usually start. It is time for our Movers and Shakers report.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers report.
All right, everybody, welcome to the Movers and Shakers, the portion of the show we break down what the heck is lighting it up here at CME over the course of the past week. Usually we start with this, but Derek did yeoman's work diving into Sean's seat today, so didn't want to hold him hostage for too long here on the show. So what was lighting it up this week to the upside and to the downside, aka to the light side and to the dark side? It's just me now, so I get to pick where we start. And you know I'm going dark side, listeners. Number 5 to the dark side, off 2.05%. It's palladium. Going out to the metals again. Number 4, it's corn. Derek was just talking about the ag suite over there for CVOL. Corn off 2.22%. It was number 3 in the same direction last week, off 7.6% almost last week. So rough couple of weeks for corn. Of course, prior to that, they had just insane weeks. You just heard Derek break down the ag complex, kind of a surprise hit over there at CME from an options perspective these days. If you've listened into this show, looking at these numbers, that probably won't come as a surprise to you. Number 3, taking a bit of a break from the top spot this week, is lumber, off a comparatively mild 2.25%. It was number 1 in the same direction last week, off nearly 15%. So a 2.25%, that's a rounding error in lumber these days. Too bad Sean's not on, because his fence continues to get cheaper for the last couple of weeks. Hashtag fence watch. When will he build it? I suppose we'll find out. Number 2, platinum off nearly 2.6%. And number 1 to the dark side this week, soybean meal off almost 3.5%. It was number 5 in the same direction last week, actually down more, off 5.2%. That just shows you how light the dark side is this week. By the way, if you're wondering if you don't have the full tools, you can't access this chart. We tweeted out, the folks at CME always tweeted out before the show as well. So if you follow CME or us, you should be able to see the movers and shakers chart for yourself. And you'll see that there is some aggressive, but overall, it's not as crazy as it was. Let's go to the upside now. Let's go, AKA the light side. And let's go to number 5, heating oil off 3.87%. Number 4, we've got RBOB. I think we got a bit of a trend here in the upside this week, listening. A little bit of energy. Number 4 is RBOB, up almost 4.4%. Number 3 is Brent, up almost 5.75%. Number 2 is our old friend WTI, off 6.88%. Number 1 is our old friend Eurodollars, up about 13.8%. It was number 1 the same direction last week, up about 7.94%. Let's move now to the vol movers and shakers. Let's start in the declining realm because Bitcoin vol actually given up the ghost since our last show. We saw it just kind of spike up in that big sell-off and now finally coming back off. Bitcoin vol, number 1 decliner on the vol front was the Bitcoin 30-day contract, off nearly 12%. Again, that's vol, 12% of the vol. I know percent of percent. It's confusing, but stay with me here. Number 2, Bitcoin 60-day contract, off 10%, and the Bitcoin 90-day contract, the vol there, also off 10%. So one of the questions we've had for a while there is, and if you listen to our Crypto Rundown show, you know you've heard this as well, can Bitcoin vol maintain the levels it used to have, or is it more like a precious metals vol now where it gets these short-lived spikes and it comes right back down? At least for this week, the answer is the latter. It's coming right back down. Let's look at the vol advancers. Not as much on the vol advancer side. It's mostly feeder cattle. The number 1 vol advancer this week, feeder cattle 30-day contract, up 2.2%, and the rest is all feeder cattle all the way up to about 60-day, up about 1.7%. So mostly feeder cattle, up around 2% in the vol advancers realm out there. All right, since we just talked equities on the vol front at least, and now we are being pretty much dominated in one direction by the energy complex, let's head out there next. A little bit of the old energy.
It's time to tap into the deep options well of black gold, Texas tea, nat gas, and more. It's time to talk energy.
All right, everybody, let's do it. Let's talk energy. It's been a while since we hung our hat out here with our old friend WTI. You know, it was a staple. It was a fixture on the show for a long time. Then so many other products kind of intruded on our movers and shakers that we kind of had to hang our hat out there, including the ags, kind of a bit of the upstart out there of late. But now we can go back to WTI because energy is pretty much dominating our upside this week. WTI number 2, up nearly 7%. Coming into showtime, we got WTI at nearly a 67, 66.80. That front contract there, that's up 3.25 points just this week, just since Monday. That's up 5% just since Monday, listeners. So big week for WTI. In terms of where the action was this week, 40%. By the way, how much paper went up in WTI this week? 436,000 contracts. So a pretty active week. 40% of that, so nearly half, coming in the July contract, has about 21 days to go. So we'll hang our hat out there. By the way, if you're wondering what the vol is out there in July WTI, it's about a 29, coming off nearly 5 points this week. So vol coming in a little bit, kind of behaving more like an equity now. We sell off, vol gets bid, we rally, vol gets hammered. So interesting out there. Let's see if the skew holds up to that, and it seems like it does. The puts are bid, the calls are offered. Last week, the puts were about 9% bid. This week, 9.4% bid, so puts a little bit more bid. Calls last week were 5.1% cheap. This week, 9.3% cheap. So skew-wise, vol-wise, WTI looking and feeling kind of like an equity these days, which is not a new development. It has done that for a little while out here. Let's see what the most active contract was out here this week. Looks like it was the 70 calls out here in July. Let's just do a quick scan to make sure nothing is toppling it from its perch. Nope, it was the 70 calls doing about 17,500 contracts this week. By the way, of course, you guys, as always, can play along with the home game, cmegroup.com/TWIFO or /TWIO. Both of those should work. That'll get you this report. Go to the drop down there for energy, click on WTI, and you'll be off to the races. You can follow along with me right now. You'll see the 70s lighting it up. Actually, a little bit more than that on the tape now, given today's paper, about 18,300 out there. So a little bit more paper on the 70s, some more paper just going up. The big day this week, though, Monday, nearly 11,000 of that 18,000 on Monday, about 2,500 on Tuesday, 4,000 today. So a pretty active day today, and about 1,000 on Wednesday. Looks like back and forth. Even of that 11,000 going up on Monday, only about 1,300 of that was opening. So interesting stuff. So a lot of back and forth. I guess that makes a certain amount of sense when you think about it. Threatening the 70 strike, we retreat from it, 70 strike. That's been a psychologically important level for a while there out there. Sometime that long ago, we were talking about the 40 handle, listeners, in WTI. So now we're talking about the 70 handle, and a lot of paper backing that up this week. Then the number 2 contract, you actually got to go out a little bit, got to get out of July, got to go all the way out to D. So it was the D65s doing about 15,000 this week. The big day out there, listeners, was today. Looks like maybe a vertical going up out here today. The 65s and the 75s are both trading pretty actively. 10,500 of the 65s going up today, 9,500 of the 75s. Obviously, I don't have OI for these, so I can't tell yet if these are what's opening and not, but it could be a roll or it could be a just straight up vertical. It has the feel of a roll, though. 65s and Ds, you probably put those on earlier, and you're probably maybe rolling those up now because we are indeed through that strike, so it could very well be a roll. But either way, 15,000 of the 65s trading this week, most of those today, and 12,600 of the 75s for our number 3 contract also trading today. And again, 9,500 of that, the lion's share going up today. So I'm going to go out on a limb and say that's probably a roll, but I'll have to go check after the fact to make sure. So interesting stuff. Not exactly surprising paper. 65s and 70s. This is kind of where we're hanging out in the underlying. Let's see if we can find a little bit more aberrant, weird paper out here. Well, if you were looking, if 75 is not even optimistic enough for you, how about the OC 90s going up 3,500 times today? Oh, it looks like the OC 80s went up 3,500 times as well. So a bit of an 80-90 vertical, listeners, about 3,500 times in October. 80 strike sounds kind of outlandish. By October, sounds even more outlandish, but a vertical, I can get a little bit more behind that than just straight up buying the 80-90s. I'll have to look and see some premium, see what they paid for this bad boy, but interesting stuff out here as well. We're always talking about weird upside in gold and in the metals, but it does lurk out here in the energy space as well. Let's look really quickly let's go out to June of next year. The 90 calls also trading out there at 3,200 times. I can get a little bit more behind the 90 calls in June of next year than I can perhaps the 80-90 vertical by October of this year. But fascinating stuff afoot here. Since there's so much energy dominating our light side this week, let's go out to a little bit more. No nat gas this week, which is kind of interesting. Let's go out to some other contracts that we don't get a chance to really talk about out here on the show that often. Heating oil and RBOB don't always make it onto the show. RBOB for a reason, because it doesn't really do a heck of a lot of paper this time so far this week. You got about, a whopping 1,200 contracts out there in RBOB. And unfortunately, heating oil, kind of a similar story. We're talking hundreds of thousands, 400,000 plus in WTI, and pretty much a low level out here in, of course, heating oil as well, less than 1,000. So unfortunately, I would love to pull up some other energy out here, but there's just not a lot of paper in these others. Brent, kind of a similar story out here. Again, if nat gas was in the top movers, we could dive into that, of course, but unfortunately it is not this week. Let's keep on rolling. Again, lumber, another one we can't really break down all too often because it doesn't really do a heck of a lot of paper out here. But what has been doing some paper out here of late, and Derek just alluded to it being the surprise hit of the season out there at CME from an options perspective. It's ags. So let's get to it.
It's time to get our hands dirty exploring the latest options trades and trends in corn, wheat, soybeans, and more. It's time to talk ags.
All right, everybody. Welcome to the ags portion of the show where we break down all the activity going on out there in ags. By the way, Derek was just talking about his CVOLs. Let's pull up some of these CVOLs for ags. They have that now, and we could look at it for ourselves. If you're curious, the overall ag basket of CVOL, which has pretty much all of the main ag products you're going to be interested in it. It's going to have corn, soybeans, wheat, soybean oil, soybean meal, lean hogs, live cattle, and class 3 milk, which if you heard our correlation episode last week towards the end of it, interesting inversely / non-correlated asset class out there, dairy. Maybe worth a second glance. But that's a conversation for another day. The ag CVOL right now at right about a 31. 30.98, up about a quarter of a point. Remember, these are end of days. These are kind of close to close type of numbers. So you're not going to get an intraday one. I'll be curious to see how that's performing right now. But fascinating stuff. Looks like the high of it was about 34 recently, and it's at about a 31 right now. So it's come off a wee bit, but also the low, since they've been calculating this data, was about a 21. So it's still well north of the low. We're heading on out to soybean oil right now. By the way, you folks, as always, can find this. Go to the ags, drop down, go to soybean oil. It goes about 45,000 contracts, so a decently active contract, but again, not blowing the doors off. It's not a euro dollars out there. If you're curious what the CVOL is for soybean oil, it's about a 34.5, a little bit higher than the overall ag basket, and it topped out at close to 44, it seems like, and the bottom is about 25.5. So we're kind of almost equidistant, a little bit closer to the high out there, but right in the middle there in terms of the CVOL range out there in soybean oil. So again, check these out. These are interesting, and they're only going to grow more informative and more useful as they add more products, and indeed they start updating the frequency so you can get intraday, which will hopefully be soon. And then these will really be useful. But if you want a nice snapshot of what's going on across all the different products from a vol perspective, CME finally has that here with CVOLs. Type in CME and CVOL. You can see this stuff for yourself. Let's go back out now to the TWIFO report, see what's lighting it up out here in soybean meal this week. As we said at the top of the show, we have ags kind of dominating things. It was off about 3.5% since our last show. It's off about 2.25% just since Monday. So the sell-off has persisted through this week. The soybean meal at about 389.90 coming into showtime. So that front future off about 9 points. That's also where over half, 58.4% of the paper went up in that July contract that has about 29 days to go. Obviously, not a lot of weeklies action out here in soybean meal. And in terms of, let's look at the vol out here. The vol actually ticking up. The vol at about 26, pretty much even, up about 2 1/3 points from last week. Skew-wise, the puts were kind of even with the at-the-money. They're only about 0.4 of a point rich. This week, they're about 5% cheap. So the puts taking a bit of a shellacking this week. The calls were about 0.8% cheap, easy for me to say, last week. So it was almost a flat skew curve last week. The puts were kind of negligible. The calls were kind of negligible. This week, the calls are now bid 4.2% rich. So we got an interesting kind of bit of inverted equity skew here. The calls are bid. The puts are offered, and about the same level out there, which is interesting as well. Some of this could be just the light options volume makes it hard to have a reliable skew number, but also just interesting developments out here. Let's see what the most active contract was out here. I said we're at about a 389.90 coming into showtime, listeners. Looks like it was the Dees 450 calls that were just slightly in the lead with about 4,100 or so. The lion's share that going up on Monday, 2,100, 1,600 on Wednesday. Seems like someone was getting the heck out of Dodge of these all week, listeners, because they were pretty much closing every day for almost all the paper that went up. So someone closed a lot of the Dees 450s this week. Maybe they were short it and they decided to get the heck out of Dodge, or maybe they were long it and decided it was a bit of a bridge too far. Either way, Dees 450s to close was the most active contract out here in soybean meal, followed by the 410 puts here in July, doing nearly 4,000 contracts, 3,700. This is eerily even paper, pretty much 1,003, 1,003, and then 1,063 of these trading all week, 663 on Monday. So lots of threes in the 410 puts in soybean meal this week. All of that was closing as well. So a lot of closing paper here in soybean meal. Folks getting the heck out of Dodge here on the 410 puts in July and the 450 calls in Dees. Maybe a bit of a time/diagonal risk reversal. Either way, closing on both of those bad boys. Interesting stuff. Again, soybean meal, not one we get the chance to chat about a lot here on the show. Since we're hanging out in ags, let's go really quickly to a complex and a product that's a little bit more active. That is, of course, corn. Corn's a pretty active contract, well more than 45,000 contracts on the tape out there. How much more? Well, if you go into that drop down, go to ags, and then go to corn, and then hit select all, got to do that to see all the volume, then you can see for yourselves. So more than 10x, listeners, talking 613,000 contracts going up in corn this week. Of that, the most active with about 38% of the paper coming in the July monthly. It's got about 29 days to go. Vol out here, man, the vol got annihilated in this contract. Surprised this wasn't on our vol movers. And this, this might be a weird print because it's showing me 43 for the June vol, and then 23 for the July vol, and then getting up again to 46 again in the next contract. Unless there's a very strange term structure, which is possible. I'm going to go out on a limb and say that's probably a bit of an aberrant print out here. I don't think the vol came off 12.5 points, because if it did, that would be on our vol movers and shakers report this week. And it was not. But this is where the most action was this week. Listen, maybe some of the paper will inform what's going on out here. The puts last week, they were about 11% rich to the at the money vol. This week, they're about 4.3% cheap. So they swung aggressively in the other direction. The calls were about 1% rich to the at the money last week. This week, about 4.2%. So calls getting bid up, puts coming in pretty hard, as corn this week is actually up about 0.75%, or about 5 handles. So obviously the lion's share of that sell-off came in the latter portion of last week, right after our show. That's again why when we're doing our movers and shakers, we go back to last week, because we want to make sure we get the full weekend. We're not just looking at, I know this week in futures options, so it implies that it starts on Monday, and the reports certainly do. But when we're looking at all the action, we have to go back to our last episode last week. In terms of the most active contract out here, I said we're at about a 664 in that front future. And it was the 650 calls here in July that were leading the dance this week, listeners. Actually, I take that back as well. It looks like something else usurped that as well. D's 600s, just ever so slightly, a couple of hundred contracts more. 16,600 of the D's 600s going up for number one. The lion's share of those yesterday, about 6,000 yesterday, 5,400 today. So another active day today for these D600s. About 3,200 on Tuesday and 2,200 on Monday. Most of that throughout the week was opening. So opening paper on these calls in D's. Then we jump to number 2, with just right behind it, the 650 calls in July. Now this future, again, 654.5. So a little bit of a different story out here. And the 650 calls doing about 16,100. So again, just a few hundred contracts behind our number one contract out here. The most active day was Tuesday with about 7,000 exactly, followed by Wednesday about 4,000, today about 3,000, and Monday about 2,500. Total of about 16,100 going up this week. A lot of back and forth on these 650s, which isn't surprising. These are around the at the money strikes. People coming back and forth on these hot and heavy. Then we fall off a bit to number 3, the 600 puts. Also in July, doing about 12,500. The most active day today, 5,300, 3,300 on Tuesday, 2,900 on Wednesday, and not a lot going up on Monday. Again, kind of scattered to slightly biased opening paper on those puts. Interesting stuff out here. I do want to dig a little more into that vol blip we're showing here in that July contract. Are we really hanging out at a 24? I don't think so, but we'll dig into that and find out a little bit more here, listeners, as we keep on rolling. It's time for you guys to make your voices heard on the show. It is time for your futures options feedback.
It's time for your questions, comments, and insights. It's time for futures options feedback. Submit your questions at twitter.com/options, facebook.com/theoptionsinsider, stocktwits.com/optionsinsider, or via questions at theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's MIXLR.com.
All right, everybody, welcome to the Futures Options Feedback, your segment here on the show where you guys and gals take the reins. First up, we got a question here from Mackenzie. Mackenzie wants to know, are you surprised that CME decided to close all of its remaining options pits except Eurodollars? Well, I'm not, Mackenzie. If you listened to earlier shows when this news broke, I was more surprised at the level of surprise there was to this news. I think people who've been paying attention to this space for a while saw that the writing was on the wall. CME has been trending in the electronic direction for some time. In fact, we just had Derek SAMMANN on. Derek's been making appearances on this network for a long time. And since his earliest appearances, if you listen to those, you can hear what data he used to always lead with. And it doesn't matter what the product was. It was WTI, whatever the heck it was. They would always lead with what percentage of the volume was going up on Globex versus growing in the pit, and how much that grew since whenever the last time he was on. So that was a statistic they were clearly interested in, and that showed that they wanted the volume to flow and to aggregate onto the electronic, aka the Globex platform. When the pandemic came along, it gave them a perfect opportunity to keep those pits closed. I was not really expecting them to reopen them aggressively. They kind of, when you saw SIBO diving in and really opening the pits, they're much more vested interest in that pit, particularly out there in products like SPX. CME was a little bit more reluctant to dive back into it. They had already obviously closed the futures pit, so I was not surprised. I thought the writing was on the wall for a long time that CME was going to go this way. Again, I was more surprised that people were so surprised that they finally made this announcement. And the only real reason that Eurodollars is still there on the floor is because it's such a complex product. It's a difficult and laborious one to really replicate and do it justice in a fully electronic environment. But they'll get there as well. And then Eurodollars will go the way of the dodo as well. It's kind of just what's been going on over there for a while. So long answer to your question is no here, Mackenzie. I was not surprised. Next up, we've got the creatively named EGLT76. Something out of a sci-fi novel. Says, where can I access that correlation tool you talked about last episode? Seems pretty cool. Thanks for the great shows and congrats on OB1000. Well, thank you for that. That was a pretty impressive landmark milestone, if I do say so myself. Not many things in life make it to 1,000 of anything. Think of your favorite TV show or whatever it is. They don't make it to 1,000 episodes, let alone podcasts. Most of them wither and die on the vine, let alone have any listeners after a handful of episodes. So to make it to 1,000 in the cutthroat and brutal world of podcasting, it's a bit of a feather in our cap. So thank you for that acknowledgement. As for your question, where can you access that tool? This is one of the ones, we said, and Derek even mentioned at the top of the show, they have great free tools. They have a lot of great free tools. We've made sure this show is just overloaded with great free tools for you folks. But the team over there at Bantix, they also make some cool premium stuff. And this is one of the latter. So if you are a subscriber to the premium version of QuickStrike, you can't do this in the cmegroup.com/TWIFO, unfortunately. But again, they got to put food on their table as well, listeners. So got to have somebody paying for something out here. It's not all free. But in looking at the reports here, if you do have the premium version of QuickStrike, you can click that button that says Quick Reports Home. And when you see that, you'll see a bunch of different product reports. You have the COT report, aka the Commitment of Traders report, Pace of the Roll, our TWIFO report, the one they do for this show, other stuff like FedWatch tools, a whole bunch of stuff. One of them in there, you can also see the market scans, by the way, which is where we get our movers and shakers report. But within that list of tools and that litany of reports, you will see the cross correlation tool. Click on that. And then a lot of people, when they do this, they always want to know about crypto. So when I go into the settings, make sure Bitcoin and crypto are not selected by default. You have to go in there and add that, select that to your, otherwise it just gives you kind of the standard benchmark products. And then you can click whatever date range. I just clicked on 1 week for myself, and it will show you all of the cross asset correlation over the course of the past week. Like for the past week, we had Bitcoin. It was pretty much almost negatively correlated completely to corn. Almost a -1 correlation there to corn. So interesting nuggets like that. Obviously, you want to go a little bit farther out if you're looking for meaningful correlation data, but you can play along with it and play around with it however you feel like out there. That's where you find it. It's in the premium version. Go into the Quick Reports Home and then click on Cross Asset Correlation. I encourage you, if you do have those, click around that Quick Reports Home. There's a lot of cool stuff buried in there that you may not be familiar with, and it's certainly worth checking out. All right, everybody. Unfortunately, that music means we're coming to a close a little bit early this week, and I did do that massive, almost 4-hour spectacular on Monday. Got to rest the voice for the rest of the week. We will, of course, be back Tomorrow, Volatility Views, noon Central, 1 p.m. Eastern. And then, of course, not back on Monday. Monday is a holiday, so no shows, no crypto, no OB on Monday. Back again on Tuesday. Going to kick off the pro in some interesting ways on Tuesday. Stay tuned for that. And, of course, back again on Education Wednesday, Boot Camp, and OPR, all the way through to another Thursday, another episode of This Week in Futures Options.
Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. Investors in the U.S. and around the world are using FTSE Russell indexes to benchmark their investment performance and create investment funds, ETFs, structured products, and index-based derivatives. Many Options Insider Radio Network listeners will be familiar with the Russell 2000 Index. Russell 2000 futures and options are currently trading on the Chicago Board Options Exchange and CME Group. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.